This is just AMZN on Tuesday, February 11th, 2020. Taking a look at the 5-minute. Today was a bullish gap, and yesterday was a bullish candle, so it's a bullish retest gap. And pre-market just kind of ran up a little bit and then did this little S-curve thing into a high wave candle right before open, and then a little bit bigger S-curve, and came down almost to where I had drawn the previous all-time high just from last week, or no, right after earnings. We pushed through yesterday, and just looking at today. So nothing to the left really interacts with the prices that we have today. So we'll just zoom in on today and see what happened in the candles here. So high wave candle, another high wave candle, a little bit lower low, lower high, and then a bigger candle. This is people taking profits. It's all-time high. Everyone who's ever bought it and held onto it is profitable. This is just people selling into a good gap up, especially people right at the close yesterday buying in, and it's up and they get out, and then right here we have two candles that have lows that are 12 cents apart. And so this is basically a tweezer bottom. And then you throw in this candle, which is a hammer, and the highs being just about the same level. These three candles, another high wave candle that actually closes bearish. So you got tweezers, hammer, high wave candle, and the very next candle breaks out, breaking above these highs, which technically this candle moved above the highs but didn't close above it. So this is the first candle that now once we get above, you can get in right above this candle and just hold on for the ride. Yeah, it just ran. A really nice bullish candle, inverted hammer, inside candle, continue bullish, another hammer, another bullish candle making a higher high from another hammer, another inverted hammer, inside candle, breakout, another hammer. This one pulls back a little bit more, holding the lows of the bearish candle here. Let's see, are these tweezer bottoms? The lows are 3 cents apart. That's pretty cool. And these lows are a little further apart. These are 51 cents apart. Okay. So still just everything's just getting bought up. Higher candle, slightly higher high, higher low, higher high, higher low, higher high, higher low, breaking out. So we've had a lot of breakout candles. Here's another one. And then you get a slightly higher high, higher low, and then a high wave candle. Look at this. The open and the close in this candle are 5 cents apart. I think that's the closest open and close we've had since this candle, where the open and the close were, let's see, doing the math in my head, 18 cents apart. So 18 cents apart here, high wave candle, 5 cents apart here, high wave candle. All the rest of these actually just had bigger differences in open and close. So this one's still making all-time high. The new all-time high is 21.85 and 95 cents. And then we sell off quickly from here. So, I don't know what exactly happened here that it did this, other than it being a high wave candle and people getting out, or people trailing their stops and get trailed out. I don't know what exactly it was, but this quick pullback and then a quick bounce, this actually turned into a double bottom with a neckline right on through here. We ran up with 5 bullish candles in a row, which is similar to what we did here, just slightly lower than here. Pulled back right into that neckline range, into this high wave candle here, inside candle, a little bit smaller hammer right off the 21, and this actually turned into a little bit of like a Morningstar reversal here. If you kind of squish the candles, it just didn't really continue. Another hammer here, so hammer is going right off of the 21, continues higher and makes a slightly higher high here than here, makes another slightly high here, higher high here than here. And what's interesting is we're right here, this level, if you follow the cursor over to the left, we're right back into the range of this candle where things kind of sharply sold off. And so right here, this is pretty much a trap for any of the bulls here. This is bulls buying up the upper wick, bears shorting it back down, inside candle, and this is an inverted hammer, another inside candle, a breakdown, taking out the 21, taking out this hammer low, getting really close to this one. And then here we go again, trying to do another tweezer bottom, 2 cents apart here, trying to go back up. Again, get right back into this candle's range, prior to the breakdown. This is just a retest of this kind of a breakdown. So you've got some higher highs, higher lows going up. It breaks down, breaks out of that uptrend channel, retests right back to the low of that channel, the low range, and then starts to roll over and rolls back over really nicely, takes out this low, which this would have been a great target here, puts in a hammer, bounces a little bit, bullish candle, inside candle, rolls down again, and it just goes sideways in here for a little bit. It's not as clean of a stair step. I mean, these two candles are sort of a stair step, but we didn't stay below that. We broke down, came right back up here, made a slightly higher high on this pivot than here, but again, made like a kind of a hammer, just about an inside candle, starts to roll over and pushes down. This is the most bearish candles you've had in a row all day. And it does push right back down. It gets us right back into our channel here, and bounces, actually recovers a little bit into the close. And so it recovered, the high where it recovered is right here. It's kind of into this range of this hammer. It's slightly below this level. And we're pretty much flat on the day from where we opened and closed. I mean, slightly up, or I'm sorry, slightly down where it actually closed, apparently. I thought it was slightly up. Where's the actual close? This candle? This is the open. I don't know how the open is right here at 8:30 and the close is right here. And it's saying that it's a bearish day because this should be a bullish candle. That's a little strange. Okay, so the open was 2150.90. Is that this candle? 2150.90. Okay, and the close is 2150.80. 10 cents less. 2150.80 is not this candle. 2150.80 is not this candle. I don't know how it's getting. It looks like in the 5 minute, the close should be 2152.27 because of this candle. This candle closes at 3 o'clock, 259.59. That's the end of this candle. That should be the closing price. I don't know why that's not showing up the same on the daily because this should be another bullish candle. Slightly, but I don't see it in the 5 minute candle saying that it's actually a bearish closing on the day. So I'm not sure how we have a red candle here with this closing price. Open price looks correct. I don't know why it's looking that way. But anyway, just walking through the day, seeing the candles that show up, lots of candles that are tradable, just knowing the candles, knowing the sentiment, and some of the strongest were right here at the open. So, having very evenly matched candles, now much lighter volume on the bullish candle. When you combine these two bullish candles, the volume pretty much adds right back up to this bearish one. But these three candles together, and then this one kind of triggering us in, and then a continuation. So really, like, you had a good amount of rest here, right at the open. And if you were too patient, waiting for confirmation is going to go higher, you're missing the really good risk to reward. So let's jump over to the options and look at what we could have done. Let's say if we got in here on this breakout, at the closing price of this candle. So 855, let's just see what that price was. So the 855 candle had a close here at 1113. So if you're getting in at 1113, you can't really have a stop down at 1013. It's too wide. This is the 2200 calls. Now this candle, the range is still more than $1. These were harder to trade just because of the range of the candles. Now on the option, we did put in a tweezer bottom of $6 on these two. Nobody knew it was going to bounce here. It did. So I don't know that this is the right option to be looking at in terms of mitigating the risk to $100 risk, to having it that small. If you waited, there were some other candles that had some smaller ranges, but still nothing less than that dollar. Not until later in the day, I think we had some over here, maybe. These are all still really wide candles. So it was really tough early in the week, this being a Tuesday, and there's still 4 days, 3 days, whatever, till expiration. at this point, there's still 4 full days of trading. That's a lot of theta decay. It's a lot of range in these candles. I mean, look at this. It went from 6 to 22. Had you bought the low and sold the high, obviously, you're not going to do that exactly, and definitely not every time. Maybe once in your life you'll do that. I've been close, but haven't gotten the low and the high, or at least not that I recall that happening. But yeah, even this option was a little bit too pricey for $100 risk. So if we go out a little further, this is the 20 to 25. Still had decent volume. Again, it's a Tuesday. There's plenty of time left till these expire. Much too wide of range on these candles, but look at this. Here's one of those 40 cents. Here's one of the 75 cents. Here's one of those right at $1 right here. So really, as this one's breaking out, just getting a setup around this candle would have been a good opportunity to be getting in. So that would have been really getting in like 650 by 550. Let's just do it that way. That's close enough. 650 by 550. It actually pulled back a little bit and then went. And then even up here, it went sideways for a bit. So you could have had a stop, or you could have had an entry looking for a pullback on the option, like way down here around 750. Would it have filled? Yeah, 739 is the low on this one. So 750 should have, and then your stop's down at 650. Another possible, way to get this set up. So anyway, just going a little further out earlier in the week is usually a viable way to get into an option. As long as you're setting, you're looking to buy at where maybe you would have originally put a stop, and so you get a feel for these options. Now it's really interesting, the move that we had here, this quick pullback. The price that we came into here at the low on the option was actually much lower compared to where this was. So this was still kind of floating above everything. It was into this inverted hammer, well above the open highs. But if we look at the option, this comes right into the 750 range. That's right into this gap, and that's well into the high of the opening candle. Now, would you have had an open order sitting here? I doubt it, just because that's a big range to pull back into and have $100 risk. But if you're watching this and it comes back here and you're looking for a place to get in after this happens, maybe you have a puke order on here. That's fine. But puke orders are tough, early in the week when you don't have a really clearly defined range that it's holding or a basing. We'll look for that as the week goes on. Otherwise, you have to be much further out of the option, and then you don't have as good of a move in your direction when it actually gets going. If you're watching this and saw this bounce here, you maybe set up something that, okay, if it does come back again, where's it going to come back to? Maybe make a higher high, but still you're guessing at where it's going to pull back to. So it didn't pull into a moving average here. It came back down very sharply. So I just found that this was a little harder to trade with $100 risk. And, otherwise you would have had to been looking at a candle like just the hammer or just the high wave candle down here. And then once it got going, you're missing the move. And if it pulls back, you're going to hit that R and lose on its, as it's making its way up. So really getting a good feel of where the option's at, how it's moving, and where to actually set up entries and stops. You got to figure that out with the different options you're going to look at. So that was about it for the bullish moves. On the bearish side, though, as we're making these highs, we made this low on the put. 635 was this low. We had some really small ranges here, and then the spike, and then it's a double top on the option, double bottom on the stock. It just rolls back down right back into like this, this range, the 7x6 range, comes right back in there. And the same candle that I was talking about earlier, right here, that got back into this high wave candle, you didn't have to buy a put right here. You could have waited for the inside candle. You could have waited for this breakdown. So let's look at 1220. So at 1220, that was this candle. No, there isn't anyone. So in the breakdown, there's nobody there buying a put at 1220. But what does it do? It puts in this near this low, puts in this candle near this low, and then a candle. It's like a flat line. But anyway, and you've been looking at this, it's like, okay, if it rolls over, I'll get in at 7 and stop at 6, and that'll be kind of straddling this candle, the all-time high. And sure enough, it pulls right back into $7 right through here. 675. So yeah, so 675 should have filled somewhere between 7 and 675 with a stop down at 6. Just because you waited, you let it break down, you waited. Maybe you set it up here thinking, I'm going to just set up an order. And if it comes back up here, great, I'm in. And sure enough, it did. And this is a really strong inverted hammer type candle. It's not quite as big as like a shooting star, but basically it's got a much longer wick than the body. And then the very next candle does pretty much the same thing, just makes a slightly lower low and does not have as tall of an upper wick. But these two candles, I mean, this is why we didn't get the $7 price on this candle at $12.35 on the put. It held a little bit higher, but you're in. $7 by 6. Where's your target? Well, we came down to this level on this quick sharp pullback. We should be able to get a little further, maybe back into the open high, somewhere in here, a little bit further down. Maybe we'll get back into this high wave candle. Any of those could have been really good targets. Obviously, if you can take something off here, or at least move your stop so you're not giving too much back. But that's where we headed straight down to with this candle. Just a few, like 30 minutes later, we're into this low again, and we start going sideways. And as it goes sideways, so let's look at, we got into that same price, this low, into the 1 o'clock hour. So from 1 o'clock till about, I'm going to say 1:55, so almost an hour, we're kind of in this range going sort of sideways. I mean, poked down a couple times. So from 1 o'clock here, where we hit that target, hit this high range, great. We're into the $11 price range, somewhere in there, 10.50, 11. We actually hold that as low on this option. We're not giving that premium back. So the market makers are anticipating they don't want people being able to get a discount on the option. It doesn't actually move that strongly up. It does move down a bit, so you're getting some spikes here in positive on the puts, and then comes right back into this same low. So really we've established now this high base here that I was talking about. You couldn't really find it on the stock, but you're seeing this. Sorry, couldn't see it really on the option. There's not really a high base in here. You've got some higher highs, you can tell when that breaks. But on the puts, you're actually establishing that base right in here, right around $11. It's an old resistance, now shown as new support. And really at this point, you can just have your stop sitting up here. I mean, it depends on how much you would want to give back or be okay giving back. If you're in at 7 and you control your stop up to 9, lock in 2R with slippage, maybe an R and a half, hopefully nearly 2R. Or maybe right at 10, so you lock in 3R with a little slippage, maybe 250 or 2.5R, something like that. But if that holds at 10, and you're giving it some wiggle room, you're already up. You haven't locked it in, you haven't put it into your bottom line yet, but you're still up, and it's likely that you'll maintain some sort of a win. And it puts in this base, and then continues. And as it continues, then you continue to trail. And we're right into this. This would be the next target. We didn't quite get there here because we have an uptrend line. And then we're right there. We're into the high wave candle. Right here, we're into the high wave candle. This one, right in here. And we keep going lower. Some people thought we were going to bounce off of this low. We didn't. We continued lower. We actually came right back down almost to the same low that we made here with these tweezers. And we held it. So now we'll see, is this a bigger S-curve than we got as this being a quick retest? So this is the quick retest. Is this a bigger S-curve? And are we headed higher? We did sort of retest the previous high. So I'm not going to necessarily move this and leave it, but here's the new high. We almost got there here, almost got there here. So I'm going to leave it at this price for now, and we'll see if we do some more interaction. I may move it up to these lows, or maybe a close, and see if that works a little better. And then I'll wait and see if we can get above this and make another high candle. But we are at an all-time high, making a very large high wave candle. this could be the top for a bit, and we pull back a little more sharply if we get a bigger sell-off, possibly. Or this is just a pause and indecision, and we'll continue higher. The squeeze is, squeeze is nearly exhausted. It usually lasts like 7, 8, 9, 10 bars, something like that. We're right at the, I think 7. I'm kind of this right. There should be 7 bars here. 7 histogram bars, 7 candles. Since the squeeze technically fired. So, this is a decent move. Just days ago, the middle of last week, we were in the 2025 price range. Now we're at 2185. So we moved $160 in like a week's time or less than that. On Amazon, that's significant. I mean, not anything that's significant, but here, it's a good ways up. So high wave candle today. The lows were quick. We made in lows here and lows here, and then the highs were a little slower to get going back down. So, people taking profits, people shorting it up here, any combination of that. And here's just another thing I thought was interesting. If I duplicate this up here, it doesn't really line up with too much. But if I duplicate it again, oh, you know what? It lines up with this pre-market. I do it again and draw it and drop it here. We're right into that high wave candle. So, and then we didn't quite get as high here to touch the high. So I just thought it was interesting. I'll leave this on and see if we get into that again, continuing higher. But we've just been climbing. We've just been racing higher. And at some point it needs to rest, but it's been, it consolidated for so long. I mean, look at this. Remember this consolidation? This consolidation went on for like 2 months. From like January to February, basically. We started to move into March. Like 2 months of solid sideways. We've been sideways in here since August. Really, like August through just about the end of the year. So like 1, 2, 3, 4, 4.5, almost 5 months. We were sideways, really range bound, slightly down. From where we started. Well, almost, really break even from where I started this. So right here to right here, basically break even. So that's nearly 5 months, 4.5 months. That's more than double this. And then we put in this thing here for another month and a half, where we just went sideways again, making a new higher base. So if I include like some of the prices up here, again, it's August through essentially January. So 6 solid months going sideways, and we're breaking out. I mean, it can just continue. And then, if we do the same thing looking at the weekly and just see what's going on, I think the squeeze is probably exhausted here. Nope, squeeze is still going on the weekly. We can still push higher. This is a bigger triangle, higher lows, relative highs, breaking out. You can see this thing push up a couple more $100 and then have a bigger pullback to 20, 50, 50. And then even on the monthly is still squeezing. The squeeze is not fired yet. And this is like, look how massive this is. This is the last time we had a squeeze. We were down in here. And then the move we had was this. I mean, what if we do that again when this one fires and this monthly squeeze fires? And this is even longer. What if we move, thousands of points? I think the potential is there. I don't know that it's going to slow down, but we'll look for places to pull back. We'll look to play calls. We'll look to play puts. And mostly, I'm looking at the 5-minute and how we figure out how to do some good day trades. Oh, yeah. This chart isn't set up with the after hours and simple lines. Don't all line up quite right. All right. There you go. That was a little cleaner. Hope this helps looking at the candles. Let me know if you want some more help understanding candles, and I'm glad to point you in the right direction and things that I've learned to figure that out myself. So, yeah, hope this helps. This is Just AMZN. Thanks.